Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel where we do a lot of top-down analysis of different financial assets. And today we're going to be looking at one of the minor currency pairs and CADJPY. So that's Canadian dollar paired against the Japanese yen. So without wasting much time, let's quickly get into it. And for those that have been following this channel, you know I like starting my analysis from the higher time frame where we'll try to paint a picture and work our way down to the entry time frames. So let's go to the monthly time frame to see the overall picture that the market is presenting to us. So you can also see that I've already mapped out my key points of interest because I don't want to end up wasting so much time on this particular video. So for those of us that are not conversant on how to map out these key zones, I have a full video on the channel so you can look it up for better understanding. Excuse me. So now on the monthly time frame, if we were to look at the general overview of the market, so looking at the most recent happening in the market or the most recent happening on the monthly time frame, can see that JP was making a series of higher highs and higher lows. So the market made a high, higher low, a higher high, higher low. It made a higher high and a higher low, currently being rejected as one of the strong key zones on the monthly time frame. So the question would now be, what does that mean for us? However, if we look closely, price was rejected from this key zone for 1, 2, 3, 4 months, and we're expecting price to get to this other resistance zone because price has been rejected severally from this other resistance zone. But however, we can see a big bearish candle now, which means that price is currently retracing. So this is all we can actually get from the monthly time frame. But if I'm to add my basic tools that I mainly use, which are the trend line, support and resistance. We already have our support, resistance, then Fibonacci retracement. So I can just take this trend line and add it here. Add my trend line here and then take my Fibonacci retracement to from the swing low to swing high. So you can see that if I'm to go over this again, price got to this strong support zone, was moved upwards. Our trend line initially was broken, but the higher low that gave birth to this higher high is yet to be taken out, which means our general overview is still that the market is in an uptrend, although we have internal happenings here. So we can still say we have a higher high, higher low, higher high, and this is what a higher low. But like I said earlier, the bears are currently pushing price downwards. So let's go to the next lower time frame to see if we can get a clearer picture. Okay, now the part we'll be concentrating on will be this part of the chart. So I can take this out to make the chart less cumbersome because we're not really doing anything with them. So now on those clearer charts, one might be deceived to see that market is in a downtrend. So let's work our way through it. So the market actually made a low on that spot, lower high, lower low. It came back to make like a higher high, a higher low, then a lower high, lower low. But there's something that we can spot easily here was that the market made a head and shoulders pattern. Now, what do I mean? I'll mark this out as the neckline. The neckline. So for those of us that have sharp eyes or that have done this over and over again, you would have already spotted this head and shoulder pattern. So that's the neckline of the head and shoulder pattern. This is the head, the right shoulder, and the left shoulder. So, and of course, we know that the rule for head and shoulder pattern, which we all know is a bearish reversal pattern. Okay, first, let's go to the strong key zone that will go from the monthly time frame form the head and shoulder pattern to reverse price from those zone for price to come back to the zone. Now, how do I mean? Price from the head and shoulder pattern, we saw the neckline broken, then price made a retest of the neckline and came down to the next key zone, which was this zone. So let me adjust this a bit. The next key zone. However, in trying to go from this support zone, probably to come back to this zone, price made an inverse head and shoulder pattern. Now, for those of us that haven't seen it yet, if I'm to zoom in, I can borrow from what I drew here. So like I said, what we try to do is paint a proper story to help our analysis. So that was the left shoulder, the head, and the right shoulder. To see this clearly, we can go to the line charts. So you can see that this is much more clearer. I can even zoom in to show us that this was the left shoulder, the right shoulder, the head, and then the right shoulder. And to even make this more interesting, the same neckline that created the initial head and shoulder was also responsible for the what? Inverse head and shoulder. So if we go back to the candlestick chart, the question would now be what's price currently doing? So go to the daily time frame to see if we can get this clearer. Wow. And now we can see that it is much more what? Clearer. So we have the left shoulder, we have the head, and then the right shoulder. And of course, the rule for trading inverted and shoulder pattern says that once price breaks this neckline and comes to make a retest, then price is likely to go upwards. So, and this is exactly what we saw. So price broke out of the neckline, came back to make a retest, and price went upwards. So that means based on what's happening most recently, we can add our trend line here. Can decide to add our trend line here. And then our Fibonacci retracement tool, because this is what price is doing most recently. So if we add our Fib tool, then our Fibonacci retracement golden zone would be this zone between the 50% and 61.8% mark. So what do we have currently? Where do we think price is going to this resistance zone? However, in trying to get there, it has been making a series of higher highs and higher lows, higher highs, higher low, higher high. It's made it made a higher high. This can't be taken actually as a higher low. So this will take this particular higher low, and this would be what the swing high. So price currently is making a retracement, and it is currently at our key zone, which is the Fibonacci retracement golden zone. So the question would now be, how do we take advantage of this market? Now the market is likely to do one of two things. It is currently coming downwards. It's either it's breaks out of this Fibonacci retracement golden zone and comes back to make another touch of the neckline of the initial inverse head and shoulder pattern and then continue upwards. So what I'm saying is price is likely to come down here or then go back upwards to come to this major key zone that we drew from the monthly time frame, or buyers may likely come in at this key zone and move price back upwards. So irrespective of what sellers are doing in the market, the market is still in an uptrend. So that means that if we go to all we now need to do will be to go to the next lower time frame, which is the 4-hour time frame. And on the 4-hour time frame, we can see that it's a bit more pronounced. So the question is, what do I do? When do I get to take buy trades in this market? I actually took set trades into from this particular place into this zone, and I had gotten out of the trade already. So the thing I would now do personally would be to place a counter trend line here, place a counter trend line here down to this zone. Let me take this out. So my first entry sign would be, amongst other entry model, would be if price gets to break and retest this trend line, then I can take my buy trades and hold upwards. Also, we can properly observe whatever is happening within this zone. So if we can spot like an inverse head and shoulder pattern, or a candlestick pattern like a bullish engulfing pattern, then we can even go to the much more lower time frame to see if there's a change of trend. So once there's a change of trend, you can see that if I go to the 1 hour time frame, it's obvious that the market is still making lower lows and lower highs, lower lows, lower highs. So immediately we notice a change of trend, which means once the market makes higher high and higher low, then we can take buy trades. So I'd like to stop this video here, not to extend it much further, because I believe that we don't have to make it too long. So this is my own outlook on CADJPY. A lot of people might not trade this, but there's ample opportunity here to take buy trades that can be held for a very, very long time to the key zone that we drew from the monthly time frame. So, however, it will require patience for buyers to come into this market for us to take due advantage of it. Thank you once again for stopping by this channel. If you are coming across this channel for the first time, what we do mainly here is top-down analysis of different financial assets. So please click on the like button, share button, and if you like what you've seen here today, you can hit the subscribe button for subsequent videos. And if you're starting out your trading journey, and you like to learn how to trade and learn how to analyze the market this way, then you can reach out to me via the link on my YouTube bio. I have a TikTok link there, an Instagram link, and a WhatsApp link. The quickest way to reach me should be via the WhatsApp number on the channel. So thank you once again. Thanks a lot to those that are constantly supporting me, and have a wonderful day ahead. Cheers.